I'm not using Bitcoin to go to the grocery, to buy a car, to buy a house, to buy food. Nobody's using it to buy anything. We're all just waiting for other people to come and buy it so that the price will go up. That is a Ponzi scheme. Hello everyone, my name is Modupe and today we'll be talking about speculative investments. Now, every now and then, once you start to invest, you get the feeling that there's something else. There's something new. There's something out there that you haven't learned about. I say this a lot. Investing and wealth principles in general are simple. They're very simple, but they're not easy because the real hard work is within you. The hard work is discipline to stick to those simple principles. Every now and then you would hear of some investment opportunity. It could be crypto. It could be Bitcoin. It could be Ethereum. It could be some new company that has just started. I have invested in all these things that you're talking about. I have assets in Bitcoin, in Ethereum. I've invested in companies on Crowdcube. Crowdcube is the platform that I use when I want to invest in startups. But I can bet you that it's not a sustainable way to grow wealth. If there's anything closer to gambling, that's it. Let me tell you why. First of all, if you look at Bitcoin, in terms of its utility, in terms of its usefulness, people refer to it as gold, but gold has usefulness outside being an investment. You use gold in manufacturing. You use gold to barter in real life when digital systems don't exist. But Bitcoin is essentially on a computer. Its value is totally 100% dependent on other people believing that it has value. You can't really use it to transact. The transactions are slow. So it's actually more efficient for you to use a bank to do international transfers. The only time it comes in useful is if you want to carry out an anonymous transaction. So investing in something like Bitcoin is purely a speculative bet. It's you just hoping that everybody else also invests in it so that the price can go up. That sounds like a pyramid scheme. Because if it doesn't have any utility in itself beyond people investing in it and the price going up, then it's essentially a pyramid scheme. It's MMM. Ethereum is slightly different. Ethereum has utility. People use it for other things beyond just investing. People use it for digital contracts. I still don't understand exactly how that works, but they use it for digital contracts and they use it for NFTs. NFTs are essentially a form of digital contracts because it's basically a contract saying this person owns these assets. It's not the asset itself that's the NFT, is the contract. The token is the ownership of that asset. That's what is non-fungible. You can't swap it for another. All those pictures that have been sold can be swapped. It's the ownership of the picture that can be swapped. So Ethereum has some utility, still in the digital world, but it has some utility. I spoke about Crowdcube earlier. Crowdcube is a platform that allows you to find startup companies that you can put a little bit of money in. That's how I invested in InvestEngine, because InvestEngine started off on Crowdcube, but now they have investors in other places. The issue with Crowdcube is your money doesn't come out until one or two things happens. Either the company lists on the stock exchange or they are bought over by a bigger company. So that is highly liquid, highly risky, because at least with Bitcoin, you can sell. Even if you have to sell at a loss, you can always sell Bitcoin. But this one, you can't sell it. You can't get out of that investment once you are in it. You are just hoping and praying that this company does well. And the thing is, because it's not publicly listed, they don't have to show you their books. Unlike if you buy an individual stock on Trading 212, those ones you can go through their financials. You can actually have a set of criteria to use to check. If you're investing in a company on Crowdcube, most of those companies haven't even operated. At least the InvestEngine had operated by the time I bought into them. But a lot of the companies on Crowdcube are still ideas. They're still in concept stage. So that investment is risky. If it works out, you make a lot, or you make a lot in a long time, because that company needs to operate and then become profitable and then grow over time. It's not even at the level of the risky companies on the stock market. So it's a bit of a gamble. Now, I've given you these three examples because there's a reason why people would invest in things like this, because they feel, I'm not an investor, I've done all this other, I've done emergency fund, I've done ETF in ISA. These are all boring stuff. They're too easy. Let's do the speculative ones, the interesting ones. It's one of the quickest ways for you to lose your money. You can do it. There's nothing wrong with it. It's just that, in my view, it's not necessary. It's very, very unnecessary. Before you start to invest in things like this, I would have 3 to 6 months of my money saved as emergency funds. I would have maxed out on my £20,000 ISA allowance for the year. I would have insurance, premiums all sorted. That means I have savings, you have investments, you have insurance. Before you start to consider the possibility that you might want to invest in things like this, before I even get to things like this, I would even consider putting money in properties, because property is more reliable and tangible than things like crypto. Before I even get to something like this, I would invest in it myself. I would invest in a course to learn a skill that I can use to either start my own business or get a job before you get to things like this. There's a simple criteria that I use to differentiate between something that is an investment and something that is just pure speculation or gambling. Speculation is my nice way of saying something is gambling. The difference is simple. If you're investing in something with clear assets, it's an asset and it produces value. It has utility beyond just your investing in it. Then I consider that an investment. So even those companies on Crowdcube, while I said it's risky, they're very risky to invest in. I'd rather invest in individual stocks on the stock market than invest in a startup on Crowdcube. Even those companies, they still have individual value. If you can confirm that they're operating, the problem is you can't confirm that they're operating because they don't send their books to you, unlike the companies on the stock market. But if they were operating, then you could say, oh, they're producing value. But a lot of them are not yet operating, so they're really not producing any value. There's no history for you to refer to. And then investing also has to do with the long term. So people will say, oh, crypto is for the long term, gold is for the long term, etc., etc. But long term without value is not the point. It first of all needs to be producing value. And when I say value, what's the value in it? Why are we doing this? Where is the money coming from? The money can't just be coming from other people investing in it. There's a video that I had made where I spoke about how to recognize a scam. It was an old video I made on the Nigerian version of this channel. One of the key things, the first question I said people need to ask is, where is the money coming from? Where is the value? So you need to follow the money for you to say this is an investment. If the money is coming from other investments, then it's a scam, or it's basically just speculation. It's the same challenge we had with agric investments in Nigeria. They would tell you that the money is going to come from the farms that they're buying, but in reality, the money was coming from other people putting money in the investment. It's a scam. And you need to have a bit of a track record for you to say, oh, this is an investment. You need to be able to look back in time and say, oh, people have invested in this thing for the last 5 years. Yes, and they've had results. Then it's reliable. Speculation basically just requires you to bet on it. You're just hoping that the price of that thing that you're buying goes up over time. That's all. If there's no real value that the thing is generating beyond just everybody's putting money in it and waiting for the price to go up, then it's basically speculation or a Ponzi scheme. If there's no pattern, predictable pattern to even the value increasing over time, like if a company makes profit and declares dividends, then we expect their share price to go up over time. If their business prospects in the future continue to grow, then we expect their share price to continue to go up over time. What is the reason why Bitcoin, the value should go up over time? The only reason is that more people buy it. That's the only reason the value will go up over time. But why are more people buying it? Because more people are buying it. Because nobody's using it for transaction. I'm not using Bitcoin to go to the grocery, to buy a car, to buy a house, to buy food. Nobody's using it to buy anything. We're all just waiting for other people to come and buy it so that the price will go up. That is a Ponzi scheme. So that's a clear difference. When you're trying to say, this thing that I want to invest in, is it an investment or a speculative asset? That question, where is the value? Follow the money. That's the answer to that question. Another speculative asset this is a very controversial one, is gold. Now, like I said, gold has value. The reason I would prefer to invest in stocks over gold is because the price doesn't have to go up over time. Because it has value. It's being used in manufacturing. But the reason the price goes up over time is because more people put money in it, expecting the price to go up over time. Silver is also a similar mineral. The price of silver doesn't go up over time like the price of gold does. It's not because silver is not used in manufacturing or not used by people. Silver has utility, but it has a totally different dynamic. It was never used as a reserve currency. And its supply is also controlled differently from the way supply of gold is controlled. The other thing, and this is the most speculative one that people speculate upon, is property. People will tell you the price of property always goes up. Property always goes up in value. When we looked at property a couple of weeks ago, we talked about the fact that the best way to invest in property, if you're looking at it as an investment, not a purchase, is when you use other people's money, meaning you take a mortgage, you take a loan, and you use it to invest in property. So it multiplies the value of your investment. So if I only put 20K down for a 200K property and the value goes up by even 5%, if it doesn't increase as much as stock market and the value only goes up by 5%, that 5% of 200K is 10K. Effectively, I've made 10K on my 200K. So that's a 50% growth for me or for my investment. The bit that a lot of people don't consider is property does go down in value sometimes. It's not all the time that the value of property goes up. It's not as volatile as stocks, but we've had situations. I know people that bought property and they had to sell that property at a lower price than how much they bought it during that 2008 crisis, because property prices all came down. So property does come down, right? Now, if you had taken a loan to buy the property, that impact, that amplifier impact that it has on your growth, on the growth on your investment, it also has it on the loss. Because if we use the example we used before where the value increased by 5%, if the value of that property drops by 5%, let's say you put down 20 grand to buy property as a down payment on the loan. So you borrowed 180 from the bank, the value of the house is 200K, it goes up by 5%, you made 10K on your 20K. If it drops by 5%, meaning the value of the house goes from 200K to 190K, you are still owing the bank what you are owing the bank. Your 180K is still good. Let's say the value of the property drops by 15%. So it drops to 170K. Do you reduce how much you are owing because the value of the asset has dropped? No. You borrowed 180, you put down 20K. That's 200K in total. The value drops by 15% and the value of the house is now 170K. That loss, that 30K loss, is hitting you directly. So that means you invested 20K and lost 30K. That wipes out your investment completely. Even if it was just 5% that it dropped by, that means you invested 20K and lost 10K. You lost 50% of what you invested. Because your loan is still your loan, you're still going to pay 180K. And you already committed the 20K. So that money is still going to get paid by you. But the asset has now dropped in value. Even if it's just 5%, that 5% is 5% of the 200K. So you need to understand that, one, while it doesn't happen all the time, it does happen sometimes where the value of property can go down. So if the only reason you're investing in property is because you're expecting the value to just keep going up, because property always increases in value, or so you've heard, you need to be careful because you're treating property as a speculative asset in that scenario, not as a proper investment. Proper investment means you expect to add value to the property itself, maybe build some parts, spend some money on it that will increase its value, or you rent out part of it. There's so many ways to treat property as an investment and a business beyond you just buying it and folding your arms. People do this a lot in Nigeria where you just buy land and you just wait for the value to go up. Now, a simple rule that I always apply when I'm considering these kind of investments, whether it's something I see on Crowdcube or some speculative asset or some investment opportunity that someone wants to introduce me to, is I tell myself to wait. That's all. It's a simple rule that I apply. Just wait. If I can wait 2 days, 48 hours before I act on it, if after 2 days I still feel this is a good opportunity, I'm going to go ahead, then it's fine. If after 2 days I've had time to think about it, calm myself down, look at what assets I already have and investments I'm already trying to build in stocks and savings and whatever assets or property, if I've looked at all I've already put in place and I think to myself, do I need this extra one? Will it add to my portfolio? Will it help make my portfolio more diversified, more well-rounded? Because I look at my pensions, I look at everything else that I could be putting money into, because you could put that money into your pension. You could put that money into a SIP and collect 20% back from the government or 40% back from the government. You could put that money into stocks and continue to see your 7% growth. But there's this new one that is just, everybody is expecting it to 10x, 100x, 50x. If I've calmed down after 2 days and I still feel I want to, then I go ahead. There's no real reasonable investment or legitimate investment that disappears after 2 days. So if they tell you you must act now, otherwise, then forget it. That's another way that I personally use to catch scams. Because why the rush? That's a question that I usually ask. Why are we in a hurry? First of all, where's the value? Where's the money coming from? 2, why does it have to be now else? Even Black Friday deals last the whole weekend. Some Black Friday deals last the entire month. Some of them will start on Friday and they will end on Monday. If Black Friday is doing more than just the Friday, then why must this investment disappear in 2 days? So that's my own rule. And then something else I also consider is how long has this been going on? Does it have a history? Does it have a track record? But urgency, that one of time, urgency is always a red flag. If it's always must be done now or else, then it's a red flag in my view. And then something people forget is that we're in the UK. All right, no matter what you invest in, whether it's crypto, whether it's stock market, whether it's house, HMRC wants a cut. Capital gains is a factor. So if you invest in crypto and the price goes up, be ready to pay. You have a capital gains allowance. It used to be 12,000 and now it's just 3,000. So if that investment, if you made less than 3,000, then you don't need to pay any tax on it. But if you make more than 3,000 on it, then you need to pay capital gains tax on it. The rates depend on what you invest in. I'll leave a link to the page that captures the rates. But the rates vary depending on your tax band and depending on what you are paying the capital gains tax on. But it's important that you keep that in mind. Now, still on the point of capital gains tax, one interesting point to note though is that if you are investing in physical gold, meaning you buy sovereign coins, you buy gold from Bank of England, then actually not from Bank of England, there's a gold bullion company that you can buy gold coins from in England. Then if the value goes up over time, you can sell it without having to pay any capital gains tax. The reason for that is because gold coins, gold bullion coins, are considered to be legal tender. They're basically considered to be the same thing as cash. And since you don't pay tax on cash, then you don't pay tax on those gold coins either. So that's one way you can actually invest in a speculative asset and not pay any capital gains tax. I'll leave a link to the website for the bullion company for anyone interested after all I've said. But then this is physical gold. You have to keep it yourself. You have to make sure you don't lose it, because if you're holding one coin and it's £4,000, you don't want to lose that coin. Leave a comment below if you have any crypto, or if you disagree with me that crypto is speculative. And if you have any other questions, leave it in the comments and we'll address it. See you tomorrow.